On to a big global voice. Remember, JPMorgan has their investor summit, and on the sidelines of that, we have one more voice. Remember, the US Federal Reserve will unwind its $4.5 trillion balance sheet in October. And on the other hand, we have geopolitical tensions mounting in Asia. So will the combination spoil foreign investor sentiment towards emerging markets? That's the question to Luis Oganes. He's Managing Director and Global Head of Emerging Markets Research at JPMorgan. Luis, thanks so much for joining us today. How does this narrative of US Fed changing the course, as Ida was saying yesterday, historical, how does that change the course of fund flows for markets in general?
We think that in the short term there could be some noise coming from the fact that a lot of people in the market, not only EM investors, were thinking that the Fed could actually be more dovish, and this is because of the underperformance of inflation in recent months relative to expectations. However, to the extent that the Fed decided to reaffirm its intention to hike in December and maintain the 3 dots for next year, that was seen at the margin as more hawkish than expected. We have seen a reaction in the market related to that, but we don't think that that really changes the narrative for emerging markets to the extent that EM growth is continuing to recover, and we don't think that Fed action is going to be enough at this stage to reverse the strength of the capital inflow that we're seeing into emerging market assets.
That's music to the ears, Luis. You don't think the Fed and the eventual ECB action, as and when it happens, will derail the fund flows into EMs and therefore the EM story?
Yes, so I don't think that the tightening that both Fed coming from higher rates and balance sheet reduction and eventually the ECB and answering tapering is going to be enough to really dry up global liquidity conditions in the very short term. So I think that the dynamics of global liquidity are still going to be ample enough, at least for sure in the remainder of 2017 and during the course of 2018, to keep the appetite for emerging market assets coming in. So we are not seeing this as changing really, the narrative for EM. And the anchor for this, of course, is that EM fundamentals are getting better. So growth is recovering, inflation is still quite subdued, central banks are still in a position in many places to cut. So I don't think that ECB and Fed actions for the time being are going to change this.
What's your view on the currency markets, Luis? Dollar in the near term, and if you track the rupee closely, then the dollar-rupee outlook over the next 12 months.
For the dollar, we think that the fact that the Fed has reaffirmed its intention to hike in December and to maintain the 3 dots for next year, that is probably going to provide some support for the dollar. But I would think that a lot will depend on what happens actually in Washington. As you probably know, the market has become increasingly more disappointed or reluctant to acknowledge or admit high probabilities for aggressive pro-growth reforms coming out of Washington. There are expectations that something may happen on the tax reform side, but it may not be as aggressive as initially expected. Same thing on the infrastructure spending plan. If we're all surprised and the announcements out of Washington end up being stronger than expected, that is what could give some impetus to the dollar. But short of that, chances are that eventually, this trend of dollar weakness will somehow continue, just because at this stage, the Eurozone economy is growing at a faster pace than the US. The ECB is also going to start its own normalization process. We think that in the first quarter of next year, they're going to start tapering. Eventually, maybe 2019, they will start hiking. So in a way, the euro is going to limit, what the dollar does in terms of recovering. And we think that the trend, the secular trend of dollar weakness is probably something that is going to continue for some time. So from that perspective, even though, again, short term, we may see some volatility in EM currencies, including the Indian rupee, we think that we're not expecting that dollar to have to re-embark in a sustained appreciation trend anytime soon that could really hurt the prospects of EM currencies, including the Indian rupee.
What about growth numbers for India? They don't seem to be working out too well. What's your view?
Well, we ourselves have, given this disappointment that you're mentioning, we have revised lower our own projections for India. We used to be at 7.2, we're now at 6.8. We do admit that maybe our number is still on the optimistic side, so there could be further disappointments. But the way that we see that we're seeing things is that this downward, these negative surprises and the need to do some downward revisions. At the end of the day, it is the Indian economy incorporating into the economic dynamics the recent very important structural reforms that are taking place in this country. The GST reform and the demonetization. These are structural reforms that do have a short-term cost in terms of growth, but do have as well the promise of bringing better growth numbers, better activity dynamics in the future. So I would think that these disappointments are temporary, and the expectation is that at some point the Indian economy is going to start to recover once again. From that perspective, I think that, and I'm hoping, that the authorities explain this well to the public, so that there's no anxiety about this growth, disappointment, and deceleration, and that there is no pressure for, let's say, the government adopting some kind of fiscal stimulus trying to compensate for this slower growth. India certainly does not have room for fiscal stimulus, and so I think that if people can just sit tight, I would think that some quarters down the road we may start to see, once this initial impact fades, we may start to see a recovery of activity, a recovery of exports. So all this short-term impact on the supply side because of the reforms starting to fade.